We are still looking at the expenses that are specifically allowed under business income. And we have the capital deductions or allowances. These are deductions in respect of qualifying capital expenditure. Qualifying capital expenditure, the deductions enable the taxpayer recover qualifying capital outlay over a period of time depending on the nature of capital expenditure. So capital deductions, they allow the expenditure that was incurred in acquiring a qualifying asset. A qualifying asset is that asset that takes long to get ready for its intended use. Yeah, so that is the capital deductions or allowance. Qualifying capital expenditures. Not all capital expenditures qualify for capital deduction. We should note that not all capital expenditures qualify for capital deductions. It is therefore important for us to know that the following are the qualifying capital expenditures. So the following, they are what is regarded as qualifying capital expenditure. First is plant and machinery or depreciable assets, industrial building, farm works, construction of a greenhouse, acquisition or establishment of a horticulture plant. And these are what is regarded as qualifying capital expenditure according to the Income Tax Act. Plant and machinery or depreciable assets, industrial building, farm works, construction of a greenhouse, acquisition or establishment of a horticulture plant. So we should note that some capital expenses are already allowable expenses and need not to be considered for further deductions. For example, minor capital expenditure, we already saw it. We looked at it under the expenses that are specifically allowed, so you don't need to repeat it. The cost of intangible assets, we also looked at it, then startup costs. So some capital expenses are already allowable expenses and need not to be considered for further deductions. You cannot deduct it twice. Yeah. So let's look at the types of capital deductions. First we have is the initial allowance. Initial allowance, and it is always charged in the It is always considered in the first year of putting an eligible property or industrial building into use. We shall look at it in details in the next video. Then we have wear and tear, which is for depreciable assets only. We have industrial building deduction, also known as IBD, which looks at the depreciation on buildings. Then we have farming capital deductions, which is for farm works. And these are the 4 types of capital deductions: initial allowance, wear and tear, industrial building deductions, then farming capital deductions. Yeah, we shall look at each of them in detail.